Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective, meaning each time we look at the market and ask ourselves one question: what happened today? What does it tell us about the coming days? Do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. If you look at what happened to the markets today, and we'll pop up the numbers, we got a big bounce. So up anywhere from a 1.25% down to, I think the Russell was actually up a little bit more than that, but Russell was trailing all day long, and that's because the Russell's at the highs. If we look elsewhere, bonds were up again, dollar was down 0.75%, oil was down fairly large, got a bounce at the end of the day, and the XLE took off as a result of that. Still down 2.68. That was down 10% or so last week, so oil's down there testing the lows today, and it tested with more volume, which says it's probably going to try to break them still. Elsewhere, gold really not doing anything, silver, same thing, they're all hanging. Everybody's waiting on the Fed, right? Everybody wants to see what the Fed's going to do. And so if we pop over and look at what happened in terms of the way the equities ended up today, you go up, and actually let's draw in a few things here. So we've had a range trade previously that was in this area, right? And then above that there was another range, and that range was in this area. And those two are still in effect, but basically the question is are we going to bounce out of this smaller range, get back up into this top? And there was this little area right here that I thought would give the market some trouble. Market just plowed through it today. It's going back up. It wants to test back into this area now. And that's going to be kind of the key area. You got that big breakdown bar here. The bar that we broke out of today was the other breakdown bar. And so the top of this range is going to be the key on the S&P. But I don't think the S&P is the one really to be watching now. It was today, it got over it. So the S&P did what it needed to do. Now it's up to the other indexes. And if we go look at those, we'll start with the broad composite, the NASDAQ. We had a big gap. It comes into the gap, fills the gap, and its breakdown bar area is up here. That's kind of the key test here. I don't know if you noticed on the S&P, but here and on the S&P, lighter volume. So the NASDAQ fills this little gap in this range, and it's going to push back and try to test it here. Now let's go to the two that I think are the ones that are going to give us the next test. So the S&P had the test today, did what it needed to. The real test is here on the NDX tomorrow, and that is that you have this little area right here. You're pushing up into it. Really don't have any volumes here. They're all, we haven't had volume since way back here in December, and that was off the Fed news back then. So we come back in, we do a bullish retest regen, we do a full retest on that bullish retest regen, which is not normal after 6 bars. Not so much normal, but it's not the high probability case. And now we're coming back up, and we're going to test into the little gap between the breakdown bar, the first and the second breakdown bars. That's going to be the key test. If the NASDAQ pushes up and over, well, that says this thing is going to try to go back to the top, I suspect. That's the NDX. If we look at the Russell, that's the other tell, and now we can see what that percentage actually was today. 0.62 versus the 0.25 I think it showed. So it was up a little over 0.5%. So now the Russell, the test is the top, right? Because the Russell really didn't correct as much, and then the Russell tested under on Friday, back over, had a little bit more volume, said it could test again, but everything gapped up today and just held. So the test now is the swing point high. It's right in that area. I would expect before Yellen speaks, the Russell's going to try to test that area, and the index is going to try to test its area. And how they behave there and whether they sell off hard or not probably gives us an indication. But my guess is, given that it's Monday's over, Tuesday's in front of us, Wednesday's the announcement in the Yellen conference, they're going to hang there, right? That's the way it always happens. They're going to get up here and they're just going to hang tomorrow, and they're going to wait on the news. And then either bust out or break back down. That seems to be the way this thing's setting up. Last night it was a question of whether they would set up this way or not. whether it would be, down here at the lows and then rally on the news potentially, but it looks like to me they're going to push it right up to the top and they're going to sit there and wait on the news. If we take a short break here and come back, we'll look at some of the sectors and then we'll go to some viewer questions and see what those are all about. Be right back.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade and or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the Tools and Earn Free Services or Trade with LA and earn free services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge as long as your friend continues to be a subscriber. So remember, refer one friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
Okay, welcome back, folks. As we come back here, I've pulled up all the sectors that I watch and sorted them by the percentage change today. And, it was a broad rally. It really wasn't a, shall we say, a rotation, which is kind of what, I've been thinking that we might get at some point. But instead, it was pretty much, across the board, except for when you look closely at these sectors. This, right? Those are all drug stocks related, right? They're all related. So 3 out of the top 4 were healthcare related. If we look elsewhere, the next ones we see, we got the transportations in the air, and so it was transports and then the rails down here. So that transportation sector was strong. And then looking a little bit farther, with the rates coming down, the utilities did well as I think there was one other one that benefited. It's not on the top, but the financials are down here. We see the KIE, the insurance group, I believe. And then, of course, the other one that we see in the top area here is, well, not that one, but this one, the industrials. So out of the whole top page, and then that energy bounce we talked about, on the whole top page, almost everything really boils down to those 3 sectors. So if we go in here and take a look at those sectors to see what they look like, here's the NASDAQ, the IBB. You can see that this one stretches up higher and pushes up and makes a new high. Just continues to stretch. It's overdone its ABCD structure, yet it doesn't want to come in at all. There continues to be talk of takeovers there. On Friday we had news, I believe it was with, if I remember right, I'm trying to see if I have some notes here. Oh, I don't see them, but I'm almost certain that Friday we had news of a takeover on the biotech. Today we definitely had one. It was Valiant VRX putting in a bid for Salix Pharmaceutical, and I think Friday it was Biomarin, if I remember right. But those pushes, continue to push. The biotechs continue to push. They've done their ABCD structures on the weekly. They had finished off an ABCD structure here already, and now they're putting in another one. And you can see it. The lineup is here. They still have this one going, and they're going to push it, I guess, up to the next level. It just doesn't seem to stop with the biotechs. If we look at the transports, which was another big mover today, and look inside of it, and here biotechs had a decent bounce on decent volume. Transports, another big bounce, but not much volume. Just in a range trade. It has been in a range trade for quite a while. If we look at it on the weekly, you can see other sectors have pushed to new highs. This one still is a range trade. If it gets over that range, then it's something to be more interested in. But right now it's a range trade. It continues to be a range trade. And if we look at the last one that moved big today, that was it the utilities we were just looking at? I know the utilities was one, but I thought there was another group. XLU, oh, the SOX was the other one in XLE. So let's look at those three. So if I look at the SOX, you know, this was just a kind of a dead cat bounce back up into the bottom of the bar almost, the highs bar. The highs low, if you will, not much volume. If I look at the utilities really just a dead cat bounce after getting croaked. And they push back into this. They're trying to do a retest, regen bearish. And they'll probably try to push up into that tomorrow. And then if we go over to the industrials, which was the other one, the industrials got a nice big bounce, had some decent volume. And that's pushing back up after a successful retest regen on the second of two swing point highs, the lower of the two. So, you know, it's not bad, but I don't see anything here that supports a big move up right now. If they continue to climb tomorrow and they hang up here, or maybe we get larger moves in some of these particular sectors, maybe the rotation starts to come in, you know, it'd be more interesting. But right now, I just don't see it. I don't see anything in this group that's telling me that this market is in fact, ready to bust out, so to speak. And if I come back to that here in the final wrap in a minute, I'll show you what I'm thinking with respect to that. Let's take a couple of viewer questions first, and then we'll go to the final wrap. Okay, as we come back here, one of the questions has to do with the dollar rising into the first hike and selling off. And this is the USD, and they're looking at the dollar, and they're looking at periods where Fed hikes took place. That's what I assume these green areas are, and from my memory that looks about right. And so the dollar rises up into it, then sells off. The dollar rises up into it. In this case, really didn't sell off. And then as we look at this one, supposedly the dollar rises into it and sells off, and I don't see that here either. So if we go up and look at the other chart, let me bring this up a little bit, see if we can get this one on the screen. There we go. This one seems to suggest, and this is the 94.04.98 cycle, so that graph we just saw, a different view of it. And then the average is the black one, and weeks from the first hike. So when they did this correlation, they're showing rising price, a rising dollar, and then declining dollar afterwards, minus 10 weeks, plus 10 weeks, right? It seems to be, in this case, about minus 20 up to about, actually about plus 20. Now, I don't see that in this graph. Maybe, maybe I'm just missing something. I don't know. If this is a representation of that, it's a cleaner one. I'm assuming they use the average, the mean between them all. So what does it tell me? I mean, assuming it's right, I assume the numbers make sense. I'm not quite sure how to make sense of them. But, so the dollar rises into a Fed hike. Why would that be? Well, I mean, if you think about it, it would be the natural thing you would expect, right? I mean, that's what's happening now. Just look at what's happening now. We've got the euro selling off, or actually foreign currencies in general, going down against the dollar, and the dollar expectation that it will become more valuable, right, drives up the dollar in front of the Fed hike, because the expectation is that the hike will come and make the dollar stronger. So, traders are going to front run news that they can foresee, and that would seem to suggest that's what this is doing. And then afterwards, you might get the letdown. The only thing that I would say is that you have to be careful when you look back at history, because I don't think we've ever had QE, and certainly not in these periods. And, it really depends on how long QE goes in Europe, because the euro is about 50% of the dollar index. It's weighted heavily towards it. If that QE continues for longer than they expect because Europe's in a mess, then I don't know if the dollar's going to decline afterwards. I mean, maybe it gets a little pause because it's been front run, but I don't know that that stops it. And so when I look at data that's past data, yeah, it's good to look at, but hey, the circumstances may not be the same as they were back here unless there's enough data points and we haven't had a radical change in the way things work, i.e. QE, then I might pay a little bit more attention to them. But when I look at it from that perspective, it's kind of hard to to say anything more than what I just said. Let's look at the next question. That has to do with bid ask on stocks. And so there's two stocks. One of the viewers here was asking about, and I'll just read his thing. It says, I'm missing profits today by being a little too cautious. I decided to buy EW and BIB, but was unwilling to use a market order to catch the offer price when there was a large spread between the bid and the ask. And I don't know how large the spread was. I actually pulled up a chart here of Biogen, BIIB, to look at it. And the volumes are not bad. I'm looking at a 1 minute. And so in the first hour and a half here, you had some points here where it was only, what is that, 400 in that case, and this is every minute. Here's 16, 17,000. So I would think that spread would move closer when there's a lot bid, but then again, I wasn't watching this, so I don't really know if it was that way or not. But we didn't have huge volume across this thing, and just taking the reader or the viewer here at his word, it's like, okay, there was a big bid ask. Let's say it was 10 cents, 20 cents. I don't know what the number was. The question is how, or his question is that, I thought I would get some sort of a little pullback to buy into, right? And but I was unwilling to, hit the bid with a market order. And he wants to know, do I have any suggestions as to how to deal with something like that? And I guess my suggestion would be is one, if the stock is so illiquid that you can't, catch something like that, then, maybe you just try to do something different, right? That would be my first suggestion. The second thing is that, how I work, and that is that I look for, and I'm bringing this back 5 days, I look for areas where something's happening. So for example, in this particular case, I come back over here and I see this swing point high, and I'm just going to mark this chart up for you. A swing point high, this is a high, right? That swing point high, the breakout when it takes place, which is right here, right? That gets over it and it closes over it right there, and then it gets to push up. Well, actually, it went up and tested it here, and it tested it, and this is the thing to look at. Look at the volumes over here, and look at the test. Test was on better volume. So as we test on better volume, there was also a swing point high here. This swing point high broke on the first bar and had volume. Comparatively, didn't have as much volume. So you can expect that this is, it's going to try to come back and retest and regen off of it. And that is what happened right here, right off the bat. Right? So you had a point right here as it came back into this high volume swing point high that was broken. Has an area right here that you could try to jump on it. And as it comes back, if you really had your mind set on this and thought it was doing well, and actually, had I been watching it and was trying to trade it, the fact that it tests with more volume compared to that swing point high has already broken a swing point high. As soon as it pulls back, that would be something that you just jump on it with the market order. You don't have to set, an order and just, if you're watching it during the day, you don't have to have a preset order. As it comes back in and it starts getting close, you buy a little bit as it gets close, you buy a little bit more as it gets close, right? Let's say that you have 3 orders you're trying to get into. Maybe that last one doesn't hit because it doesn't actually hit it. Or maybe you have 3 orders, 1 here, 1 there, and 1 a little bit lower. Any of those, would work, and then your stop's down here. So I think scaling in is the best thing you can do on something like that. And those scale ins, if your bid ask is too high, you just hit the bid, or excuse me, you hit the ask. You're buying here, so you hit the ask. Let's go in now that I've looked at it on this time frame. So this is let me see. Today, that was today's bar. So you got 1, 2. So the first 30 minutes, right? So let's come back into a 1 minute on one day. Let's bring in the first 30 minutes, which would have been right 7:30 to 8. That doesn't look right. It must have been the first hour. Excuse me, first 45 minutes. So let's do this again real quick. I just was curious as what this looked like. So this is that retest right here. Well, yeah, there's a lot of volume coming in there. So you should have been able to buy it right there, right as it came back in. And that, if you're looking at it on a 5-minute intraday now, you actually had a swing point high broken here in a full retest regen of it, probably. Here's the 5-minute. So actually you didn't get a swing point high, but you came back in deep. And that's the bar that would have been the one to buy right there. So, my best suggestion is scale in. And if the bid ask is so wide, you just have to, nibble at it with a market order if you really want to get into it. And if we look at the other one here, EW, this one just took off today, so you probably didn't even have a chance to get into this one. Yeah, see, this one did almost everything at the beginning. And so when you get something like this, and bring it back, when you get something like this, you're just probably not going to get a pullback, and that's just the way it works. Ideally, the place to buy would be the intersection of these two bars, but once it gets back over it right here, right, you're just not going to get another good entry. So that one pretty much is you're either in it or you just blindly buy it, and you would have had to done that right off this just sky high move. Let's bring this back farther and see. Yeah, I mean, this is all-time highs probably. So you just had to buy it. I mean, there really was no way to get into this one. Nothing you can do. And if you think about it, the market makers are going to do that, right? The market makers are, I'll put it on a 2-minute just to see what it looks like. They're going to protect themselves. So they're going to keep that bid ask. If there's not an overwhelming number of sellers, which there probably isn't because the market maker is probably having to make that market, he's going to keep his bid ask, he's going to keep it wide because he wants to be able, every time he sells something to you, he's going to try to buy back immediately himself, and that's what keeps driving this up as well. So, he's working on, every 15 seconds or so, forget the 1 minute, he's inside that. And anytime he has to, sell it to somebody, he tries to buy it back any chance he gets, and that's what keeps these things going. So if there's not natural sellers, that's when you get these big moves that just won't come in at all. Okay, we'll come back and do the final take here. As we come back here for the final thoughts, everything's being driven right now by Europe. Here's the CACs. I've got it on a daily. You have an ABCD structure that's in place, and this thing is stretching right up to the top. And matter of fact, if you do a weighted number, today it looks like it hit it. If we look at the DAX, which has been even stronger, the DAX itself is probably overshot at this point because I think it hit it on Friday. And yeah, a big move up today, that thing's overshot. So if you do the ABCD structure here, this would be the AB up. And you can see that one actually overshot today. So, this has been the driver, and it continues to be the driver. And if you look elsewhere, you really don't have, other than China, where we have talk of, the Chinese premier coming out and saying that, okay, we're going to take and, target expansion if the GDP looks like it's going to fall too low. So, it's central bank talk again. And that's what keeps driving these markets, has driven these markets, and will probably continue to drive them for a while until the central bankers fumble the ball. And so far they haven't fumbled it. And the result of that is that, as long as QE's out there, and as long as these markets don't get too stretched, then there's going to be a constant bid underneath them, and that's what we've seen. But as we just saw with Europe, Europe's starting to get stretched again. It's already finished off ABCD structures. Germany went over it. Yeah, it looks like it will go forever, and it always looks that way when it happens, right? But they always come back in, folks. You know, maybe it's gonna, maybe it's gonna expand instead of a 1.1, it's gonna be a 1.38 or something. But at some point, it will exhaust itself. It will come in. It will congest. It will consolidate, and then, assuming everything works out, and the central bankers keep flooding the markets with money, it will go back up. In the meantime, those people that are not doing that, in other words, like the United States, where we're talking about raising rates, right? They're going to struggle. They're going to struggle to make their structures higher. You had an ABCD structure here that didn't get finished. Now you've got the potential for one to the downside, assuming that fails, right, to bring it back down towards these lows. Now, we could get the case here where we get some sort of push up, pull back, and another push up again that gets us back up to these highs. Right now, what am I saying? I'm saying, hey, it's in no man's land. It's coming in to do a test. The next test is here, and it's actually a little bit higher up to there. As it comes in to do that test, we'll just see what it does. If Yellen comes out and she's dovish, if they don't remove the patient language, then you've got to expect our markets are going to get all giddy and they're going to run. If they are removing the patient language and she's not dovish, or at least extremely dovish, the markets are discounting that. They're assuming that's what's going to happen. And they're going to try to run up and be sitting there poised to break higher if in fact it happens. And that's the way the markets work. They try to anticipate what's coming, and they do a pretty good job of anticipating it. And you can't know for sure what the Fed's going to say, but the market is telling us, at least at this point, that they believe the Fed's going to hold off. And I can't blame them. I mean, look at the economic data over the last 8 months. It sucked. Continues to suck. All the numbers today was bad again. It's been that way for a while. Are we really going to raise rates when the rest of the world is lowering everything? When the rest of the world is pumping more QE from here to Timbuktu? It's hard to believe that unless we're just totally overheating. And if all the economic numbers are bad for the last 6 or 8 months, how can we be overheating? I don't see that. I don't know that that's going to be enough to push us higher, to take us back to new highs and to start another leg up. Matter of fact, I think that's going to be tough. But we can watch that NDX and Russell tomorrow to give us a good idea. I think that's where the test will be. And so the NDX up into that bar there, right in this area here that I was talking about, and then the Russell, of course, at the highs. That's the test tomorrow. I suspect they're going to test them, and I also suspect they're probably going to hang there. And then Wednesday is going to come down to what the Fed either does or doesn't do. That's it for tonight. That's tonight's take. Have yourself a great one. Thanks for joining me. Take care, and I'll see you next time. Good night.